Hi everyone, and welcome back to Teachers Talk Money, where I help teachers master their money in order to give back to themselves. In continuing with our 12 goals to get good with money, one for each month of the year, I'm excited to bring you your April goal. So first, let's recap the other things we've done for the past 3 months. In January, you made your very first budget. In February, you made one exciting and one not so exciting savings goal. And in March, you separated out your savings accounts and you considered whether or not automation was right for you. If you are just joining us for the first time, I suggest going back and watching all the videos and getting a sense of what the other goals were first, and in fact completing those goals. These are meant to be small, bite-sized goals, so it is not too late to catch up or to start the goals, but just start a few months late. In the spirit of the month of April and tax season, today's goal is going to mostly be a lot of information, and it's going to be different depending on what your tax return looks like this year. But it's going to be all about taxes. We're going to talk about what to do with your refund, how to avoid owing if you owed taxes to the IRS this year, and we are going to talk about whether or not having a tax refund is a good thing for you. I have to preface this video by saying that I am not a tax professional. I'm just giving generalized advice, and you should seek a professional for your specific situation. Since this video is coming out on April 8th, we have a little bit of time before taxes are due on the 15th. If you haven't done your taxes yet, please make sure to either seek out an accountant to do them for you or do them using a DIY system such as TurboTax. Whatever means is more available and affordable to you is a good idea. So let's start out talking about refunds, what refunds are, whether or not it's a good thing, and how you should spend that money. My rule of thumb for any windfall of money is something that I made up called the 90-10 rule, which is just that you should use 90% of that towards your larger goals, whether that be debt repayment, savings, or investing goals. And once you've used that 90%, you can then use the leftover 10% to spend in the month to treat yourself or for something else that matters to you. While I used to think that everybody should adjust their tax withholdings to get as small of a refund or aim for no refund at all, in order to kind of have that monthly cash flow and be able to use that money immediately when it is earned, I now notice that a lot of people actually save better and do better with the money when it comes as a huge chunk instead of throughout the months. So if this is you and you have no problem following the 90-10 rule or an 80-20 rule or anything like that, then you shouldn't be too worried about the fact that you're getting a refund. For me personally, I know there's very little reason for me to go through and adjust my withholdings to get my refund much smaller or to not have a refund when I'm actually ultimately probably going to use that money more wisely if I get it as a huge chunk. Now, if you do tend to spend your entire tax refund without putting any of it towards your larger goals, then maybe adjusting with your withholdings so that you get that money month to month instead is right for you. Just remember that any refund you get and any money you have after you file your taxes is not extra money at all. It is money that you earn throughout the year that was mistakenly taken by the government and not accruing any interest. Therefore, it should be handled with an intentional plan, just as your month-to-month income should be. So if you got a tax refund this year, your goal for April is to put a certain percentage of that towards your larger goals and a smaller percentage towards spending on yourself. That could be the 90-10 rule, 90% towards bigger goals and 10% for treating yourself, or it could be something else for you. Maybe it's 75-25 or 80-20. It doesn't matter as long as you make an intentional plan for it and you stick to that plan. Now we need to talk about the not so fun side of tax season, which I have seen a lot happen to my parents who are both self-employed, and that is owing taxes. Now, there's a wide variety of reasons that you might owe taxes this year. The first reason is just that you did not have enough money taking out month to month. And this could be for a number of reasons. Your tax return might have changed if you got married, got divorced, had children leave the house, right? All of these things affect our tax refunds. What you should do if you end up owing for this reason is immediately adjust your tax returns to make sure you do not owe any money, because you do not want to be in unexpected debt come tax season. So if you owed money this year, your goal for April is to adjust those returns and make sure that it doesn't happen again next year. The other reason you might owe taxes is if you're self-employed and you didn't set enough money aside for the year from being self-employed. The solution to this is to set aside 30 to 40% of your revenue for the year, specifically in a savings account for taxes. Despite the fact that you made this money through your self-employment or through your own business, you should not consider it your own immediately. You should always put 30 to 40% away in a savings account, preferably a high yield savings account where you can grow that money a little bit, in order to make sure that you don't end up in debt come tax season. So if this is you, your goal is to make a plan for next year's taxes to make sure that you do not owe once again. But the question remains as to what to do now to pay back the taxes that are owed. We can't just plan to avoid it next year. We have to kind of handle exactly what is going on now and prioritize that. I suggest prioritizing any debt to the IRS as soon as possible. If you already have a debt repayment plan, you can add this to the top of that priority list. Or if you're debt-free but are still building up your emergency fund, it should be a priority alongside that emergency fund. But you want to knock it out as soon as possible, because the farther you get behind, the more difficult it's going to be when tax season comes next year. So clearly tax season comes with a lot of different outcomes. But it's important to remember that whether you end up owing money or you get a giant refund or you get no refund, none of these things mean that you are inherently bad with money. Owing debt to the IRS, just like any debt, does not inherently mean that you are a failure. No matter what your circumstance is, there is no place for shame as long as you have a plan to move forward and do better next year. Thank you guys so much for joining me this month for your monthly money goal. Please make sure to like this video and subscribe to my channel if you got value out of this content. Have an amazing month, have an amazing tax season, and I will see you guys next week. Bye!